Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. And I have some exciting news for everyone today, because for the next few weeks, we're going to be doing something a little bit different with the show, putting a pause on the ongoing Becoming Buffett series we've been doing on the podcast, because on June 27th and 28th of 2017, just a few weeks from now, we're going to be having our mid-year DIY investing summit in partnership with Seeking Alpha. And it's going to be an exciting summit. We're going to have a lot of some of my favorite investors from Seeking Alpha are going to be a part of this summit, and we're going to have all kinds of topics, everything from what their favorite picks are, specific favorite investments are going forward from here, how they're shaping their portfolio for the second half of 2017, how they're hedging their portfolio in light of markets being at all-time highs, as well as how they go about identifying major trends and how do they identify companies to invest in, how do they research them, how do they make buy and sell decisions, all that stuff and more. So I hope you enjoy this preview of the DIY Investing Summit, and you can register for the summit for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com for your free registration. Well, Jay, welcome to the DIY Investing Summit.
Hey, thanks, Brian. It's good to be back talking with you.
How are you positioning yourself for the second half of 2017? Any changes or things you're excited about or concerned about?
So ironically, we talked, last, I think it was in December or in January, actually, very start of the year, wasn't it? And I was very excited about Teekay Corporation. It was our top idea for 2017. And it's like, it's Groundhog Day, right? And here we are again. And that is actually the stock I'm the most excited about. Last fall, that same company, Teekay, was the victim of bad news cycle, weak oil prices, all sorts of unfair correlations. And, the sentiment and the shift in the market changed. Right. And it kind of came into February, March, and the stock went up, 80%. And here we are again. It's the victim of misleading reports and bad news cycles. And so ironically enough, here I am. I'm excited about that again. It's still my top idea.
And then can you, for people who may not have heard the summit interview back in January, or maybe not be up to date on your reports, why are you so excited about TK?
Right. So yeah, thanks, Brian. That's actually a good point. I don't want to, be talking about something I haven't covered well. So Teekay Corporation is a giant holding company. They have 3 daughter companies. One of those is a tanker firm, which is basically just cyclical commodity. It's a small part of their assets. It's a very small portion. Their second asset is Teekay Offshore, which, guessing by the name offshore, right? You think oil prices, offshore exploration. It sounds horrible, right? I mean, I wouldn't fault you for saying that's horrible. In fact, Kramer was on last night, and I found his show entertaining, but
sure.
The guy, no one's ever accused him of doing his due diligence. Like, let's be honest. So, seeing his segment on his show last night, he goes offshore oil. Oh, it's bad, and yeah, but it's a misunderstood segment, and I don't want to get too far into weeds, but basically Teekay Offshore is involved in the production side. They own these assets called FPSOs, which are floating production, storage, and offloading vessels. Without those vessels, you don't have an oil field. So if you take those platforms away, the oil field has to shut down. And when we're talking about offshore oil fields, what we're talking about is exploration being bad, because that's the expensive part. It's the exploration and development that costs a lot of money. Once you have your oil field up and operating, the offshore fields are actually very marginally attractive. They cost very little to operate. So TK is in the perfect position with this company.
So Teekay Offshore would basically be a companion to any kind of offshore drilling that's actually going on.
It would be after the fact. It would be after the drilling's already done and the field's already open. So all these assets are already on oil fields.
Gotcha.
So I don't want to get too far into weeds. Teekay Offshore is just part of TK. Okay. I just want to dispel that rumor, that myth that they're like offshore and oil is bad. No, it's actually not bad. It's actually doing very well. In fact, their EBITDA is about to grow $200 million over the next year.
Oh, wow. What was the first daughter company you mentioned? You said Teekay Offshore. What was the one before that?
Yeah, Teekay Tankers. So I didn't really want to get into them because they're just kind of a commodity tanker firm. They're going to rise and fall with the market, but their impact to the thesis is very small. We're talking plus or minus $1 on up or downs. Now, the exciting part, and this is what I love about Teekay Corporation, is their third daughter company, the largest one. It's Teekay LNG Partners. And LNG is natural gas. It's a big involved in transporting natural gas from actually the biggest growing market is going to be U.S. to China. In fact, President Trump was talking a lot about growing these exports to China. Now, Teekay LNG is involved with all sorts of projects across the world, and almost every single one of their vessels is on charter into the mid or late 2020s. So very long fixed-term contracts. We're talking $10, $11 billion of backlog. And their distribution payout is set to grow potentially by up to 5 times over the next year or two.
Dividend could grow 5 times. Wow.
5 times. Yeah. How often do you hear that, right? Dividend could go up 5 times. And you got to understand, if you look at the history of this company, their dividend actually was 5 times higher about a year and a half ago. And we had that oil kind of energy crisis, high yield crisis, when the market went into panic it was about a year and a half ago, the market really started to panic. And they've recovered big time since then. They've secured all sorts of refinancings and new vessel programs there. So and their contracts are all solid until mid to late 2020s. We're talking 10, 11 billion in backlog. We're talking about distribution rates going up by 5 times. And so that's Teekay LNG Partners. So we love that stock. We love that idea. But if you love the idea, why not love the holding company that runs it and controls them? And that's right. That brings us all back to Teekay Corporation.
Gotcha. And so, and just for everyone, so is your price target still 18?
So the price target 18 was based on the realities of November, which was based on higher oil prices. Gotcha. So Teekay Offshore does make some of their money based on tariffs, right? Because they help produce the oil and offload it, right? So some of the oil contracts are based on the price of the barrel of oil. So they're kind of like I guess you could say like a fee plus structure. And also Teekay Offshore is doing their own debt stuff. So we've kind of reduced because I told you Teekay is kind of part of 3 different companies, right? So we've kind of taken our Teekay Offshore bucket and reduced that down, kind of stress tested it, if you will. Because a lot of people are saying, oh, well, what about this? What about this? And we kind of want to move away from the offshore. It's just the name's kind of scaring people, and there's a lot of misnomers about oil. So we've kind of reduced that bucket, and we've really put all the focus on the Teekay LNG. And so by doing that, we've came up with 13 to 15 as our current price target. Okay. And what that does is stress test Teekay Offshore very, very high. So we basically just maybe more bearish, if you will, just so people are like, oh yeah, this is a lot more. I'm a lot more comfortable with this range.
Gotcha. So and just so there's no confusion, is it possible to invest in the individual sister companies, or you can only get to them by investing in the overall corporation of TK, right? Just to be clear. You can actually invest in all the daughter companies. Okay. But our kind of point is, yeah, you can invest in the daughter companies. I'm not going to fault anyone for doing that, but the general partner always has the high side. Gotcha. I mean, they have incentive distribution rights. They have full control over the daughter companies. If a daughter wins, the parent company is always going to win bigger. That makes sense. And just for everyone listening, I mean, I'm looking at the chart on TK, and Jay mentioned how they had a really great run up that they got to enjoy, but it's basically right now, if you're able to if someone wants to, TK is around the same price point that it was back in November, December, when it's such a great call back then. And so that's pretty cool. It's not necessarily fun, not fun for you, but for people who didn't get in early, there's still maybe some opportunity there. Yeah, well, it's like I said, it's like Groundhog Day, and ironically, TK LNG Partners is where we're really bullish, right? That's our main selling point, and everything at that company is better today than it was in November. Everything. Awesome. So it's fascinating to see this opportunity again. Well, I hope you enjoyed this brief interview preview from the DIY Investing Summit. And if you enjoyed anything about this and found any value in it, I assure you will thoroughly enjoy the full interview. And you can register for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com. And free registration, and then the summit goes live on June 27th. And so look forward to seeing you there. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.